I'm going to start with some opening comments. And the first one is, I actually, I've read, I'm sure you've all read, I'm sure that you all got the warnings yesterday to stay home because of the public disturbances. And I've gone back and forth with a number of my own friends, and I kind of just want to take a moment and remember George Floyd. And I don't know the details surrounding what happened. I just know that this has gone on this is something that happens way too often. And I hear a lot of commentary about how bad the rioting is and looting, and so bad, and it's all bad, and it's all bad. And I just think that there's I don't know what the point is, but there has to be a point at which, we have to understand. Like, I don't know how many Black men have to die before it's acceptable to riot. And I spent a lot of time over the weekend just like, I just don't understand what's going on anymore in this part of it. So in any case, I just want to remember George Floyd, and you can't just sweep that under the rug. It's a real thing, and it's massive, and it's a problem socially. That being said, we talked about this earlier on our team call. There's a lot of talk about how bad this is for these businesses, but most of the larger businesses that this is happening to, and actually in some of the cases, the smaller businesses as well, they're not open anyways. They're not selling their widgets, and they have insurance on the widgets in their storefronts. They'll have insurance that covers the windows. They'll have insurance that covers most of the damage. And if things get stolen, they'll have insurance on some of the stuff that gets stolen. And maybe they'll have deductibles and all those kinds of things, but it's actually not a total loss for the businesses. I think the reality is the social issues that are underlying all the rioting are far more important than the losses that these businesses are going to suffer. Those that are well set up have insurance, and they're going to be paid for goods that weren't selling anyways. So because we're in, no one can shop. So there is it's an odd thing to notice, but it's something there that's we're paying attention to. So as per usual, we're going to, really quick, could somebody pop a question? Could one of the attendees pop a question into the Q&A box or the chat box, just so we know that the functionality is working? And David, that's not you. You're actually a panelist now, just so you know. So if somebody here that's an attendee could pop a question into the Q&A box or the chat box, that'd be great. Every time we've done this in the past, we've started off with the high frequency indicators. So there's a bunch of data that we get on a regular basis that comes out very quickly, comes out every week, so we can get a much better short-term view of what's going on in the world. This week, we're also going to look at some of the longer-term data, some data that's slower to update, and I'm going to look at a couple things that we've talked about, but there's now a picture from the Commerce Department that I want to share. So the first thing is the high frequency indicators. TSA checkpoints, this is people that are flying. Again, this was off 100%. Now it's only off 87%. Last week it was off 90%. So it continues to improve just a little bit. The question that came in, thanks Anonymous, is, why am I leaving so early? I'm actually being interviewed on a podcast today at 12:30, 12:40ish. So I need to go and link up with that person. He's a fellow financial planner. He runs a podcast in the Midwest, and we're going to talk about mindfulness and money. So thank you for the question. Now we know that it works. Second piece of high frequency data is the change in in-room dining. Again, remember, these all were off 100%. New York is still off 100%, 98%. California is still off quite a bit, though it is starting to open up a bit. Texas and Georgia are the two best examples we have of this. They're only off 55% now. So half of the volume of the purchases in restaurants is back. That's big in a month. It's already back a lot. Now I'm assuming that as we go forward, this is going to ebb and flow. We're going to see a higher incidence of disease, and so we're going to see some of the stuff temper. But while that happens in Texas and Georgia, because they were the first to open, you're going to see more opening happen in other states. And as we figure out, hey, if we wear the masks and keep our distance, you're going to see more and more places open. Movie sales, they're no longer zero. There's still very, very, very few, but this is the first week we're actually seeing people going to movies. You won't see me in a movie theater for a while, but there's people that are going. Hotel occupancy continues to pick up. Last week, we were off 56%. This week, we're off 50%. So we're seeing some improvement there as well. Gas consumption was off 50%. Now it's only off 23%. People are moving around. And this one is the most interesting to me. Apple Mobility. Remember, we all have those cell phones in our pockets. Our movements are basically tracked not individually, but collectively. And walking and driving are actually above their January levels. So that may sound great, but remember, this is also seasonal. It's also nice outside. So more people, people in January are staying home because it was cold. Now they're actually going out and about. So we're probably still less than normal, but we're better than we were in January. Public transit was off or still off about 62%. That's a 7% improvement from last week. So all of our high frequency indicators are better now than they were last week. And I anticipate that that's going to continue to get better and better and better as time passes. I also want to look at some of the slower data. The slow data is things like GDP, and I'm going to look at some of the personal savings. Last week we had we had been talking about this on these Q&As before, but we actually got these numbers reported on personal savings and income. And it's really kind of amazing. I'm going to share my screen here. You can kind of see this little triangle, this orange triangle here. These are the stimulus checks, and unemployment are in here. Sorry, this is government transfers. This is stimulus checks and unemployment. And what we see is while wages and salaries and wage supplements and rental income, these are all down a little bit. The stimulus and unemployment just skyrocketed income. And so you see income is actually higher in the month of April than it was earlier in the year, right? So that's really interesting, but let's look at what that means. And we're gonna look at one more, share screen. Savings. So this is spending on services, on goods, some other spending, some taxes, and this is savings. So a huge chunk of that money that was brought in the month of March and April that was in excess of expectation because of those federal stimulus checks has gone directly into savings as people, A, can't spend, and B, realize that there's a point in time around July when the additional income from the federal unemployment goes away. And so I think that what we see here is they're anticipating that they're going to have to use this money in August and September and October as we stay closed and as people aren't brought back onto their jobs just yet. So they have created a cushion for themselves. People are creating this cushion for themselves. And in numbers, I'm going to stop the share. In numbers, so we saw that the personal savings rate from March was 12.7%. So that was already an increase. But in April, it jumped to 33%. So that's a brand new record, almost double the prior record, which was set in 1975 of 17%. So what this means is people are saving 33% of their disposable income. That's a big number. And April's personal income, so the income because of the transfers actually rose 10.5%. So let's put that, what is 10.5% of our income? It's over $2 trillion. So our income March to April was up 10.5%, and that number is over $2 trillion. And spending fell 13.6%, which is just under $2 trillion, which means we actually put $4 trillion into savings. And we actually see that when you look at the money market and the M2 flows numbers, the money flows numbers. So that's a couple of those slower data points. In addition, mortgage applications rose 9%, which makes sense. We're telling everyone to refinance. Every advisor that's doing their job should be telling their clients to refinance right now. New home sales came in at 623,000. That was above the estimates of almost 500,000. So they're expecting 500,000. We got 623,000 sales of homes in April. And there is there's also mortgage forbearance. What this means is some people called their banks and said, hey, I can't pay my mortgage this month, and they've gone into forbearance. The bank's not foreclosing. The bank's saying, okay, we're going to extend and make that payment come a little bit later, and that's fine. So that's 9% of mortgage. That's 4.7 million mortgages are in forbearance. And at the same time, corporate profits fell about 11%. Now, this is 100%. All of this that's going on is based on illness, disease, COVID-19. And so the one thing we're going to look at that's going to make a big difference in this is the potential for a vaccine. And there are 100 vaccines in the works. There are 4 subcategories of vaccines. The first subcategory of vaccine is called an inactivated virus, or it's a vaccine that was used previously on other viruses. And there's 7 of those in the works. These are a slow process. They're things that have been approved, but we have no idea how they work on COVID. So it's a slow process to see how they're going to work on COVID. There's also 25 studies for viral vectors. These are genetically engineered, how do you say this? I think it's adenoviruses. So these are the ones that are really strong protective responses, but they also often come with side effects. We're still studying 25 of those. They're in the works, but they're the ones that most people are going to have a problem with because they have the potential for stronger side effects. There's also programs using RNA and DNA as a delivery system. And these are the things that have developed out of the prior corona type virus, the MERS and the SARS that we saw before. And they were worked on before vaccines for them. They're using those and retooling those to use against COVID-19. And then finally, there's 28 protein-based that are injected directly into folks with an immune responses. And so there's 100 vaccines that are in the works. The expectations is that more than one of them will be effective, and that come 2021, not for a long time, come 2021, we'll start ramping up production of these vaccines. We do have a question that came in. I want to answer this really quick, and then I'm going to get some feedback from both Scott and David, who are here on the line. So these protests and lootings will make COVID rise, right? I think the answer is yes. I think we'll know that in a couple weeks, and I think it's a very interesting point. The thing that we can do to avoid massive numbers of disease is stay away from each other and wear our masks. And when you have this looting, you have these riots and these people out there. It's a whole bunch of people coming together, and when they come together, there's going to be one among them that's a carrier, and that one among them is going to infect a bunch of others. And so, 2 weeks from now, most of the places, especially dense populations where we've seen these riots, you're going to see a whole bunch of new illnesses. I think though that there's also a whole bunch of people that are getting better. There's a whole bunch of people that we actually already anticipate illnesses are going to be coming because we're opening things up. So how much of the new illnesses are going to be tied specifically to public, the people out there in the public that are protesting? And I use those words, and I apologize because I use those words as if they actually replace each other cleanly, and they don't. A riot is different than a protest, is different than and I'm not sure what to call everything that's happening. Again, going back to the way we open these things up, today. So yes, we're going to see more infection. We're going to see more disease. I think that's at least in some frameworks built in. I think we're expecting it. And we have to, because we're trying to weigh the risks of additional infection with the risks versus the risks of staying closed longer. And different states are going to try it their different ways. And Scott is always commenting on how different states are doing it, and how we have to have these experiments to see what happens, and we have to open it up, and it's going to be differently in different places. So Scott, I'm going to see if you have anything else to add or to say on that front today.
I think, well, remember, we have a couple of clients who are doctors that are in the middle of this, and we had a conversation with them in the middle of March, and they had committed additional capital that they had on hand because they recognized that things were just a lot cheaper than they were. They had a long time horizon, and they knew that it made a lot of sense, not trying to time anything, but to be buying all the stuff on sale. And so they did that. 2 weeks later, the emotions surrounding what was still going on 2 weeks after that, the clients wanted to do a Zoom call with us. And Jonathan, you remember, one of them was literally, you know, like going to war, basically. He had gown upon mask with a welder mask, and literally on the Zoom call with us. I've never seen anything like this in real life. I've seen it in the movies with like Dustin Hoffman and Outbreak and whatnot. And he was so petrified, you know, that the world was, because he's seeing illness and death every day is what he was seeing back then. And in his world, that's all the world was to him. He couldn't understand that there were still 330 million people that were still working. He couldn't understand all the things that were actually going on positively out there because his world was so dark. And they decided to sit tight. It's been a really good decision for them in the near term. But the point of all this is people have done a lot of assumptions that as we open these states, we're going to get a whole bunch of more illnesses. They also did a lot of assumptions that we're going to have another shoe drop and the market's going to revisit all these lows. I think when you start speculating on all these things, you get away from having a financial plan and what long-term really means, right? We're not speculators. And so I'm not a scientist. I don't pretend to be one or a CDC specialist, but I will say that not an over-exaggeration, but the dire scenarios that have been painted so far have not been even close to right. If you look at what they were originally saying, 1 to 2 million deaths in this country, that was being talked about. And so I don't know what happens with the openings. I don't know what happens with these riots, but it is possible that we don't have a crazy spike like everyone's calling for. And I just want to plant that seed because it is possible. And we'll cross our fingers, we'll cross our fingers. But I know David has an opinion on this.
Sorry, I had it on mute because my granddaughter is nearby and she's making a fair amount of noise. So, I think that it remains to be seen what the level of the number of deaths we're going to have from this becomes by the end. When you're talking about the riots, a lot of these have been peaceful protests, and many of those people have been wearing masks, I've noticed, but I think in those crowds, it's very difficult to maintain social distancing. So my expectation is that in many of these cities, we are going to see upticks in the number of cases in a couple of weeks. And, in places like New York, we were seeing considerable decreases, but I think that's likely to change. I'm going to go on mute again.
Yeah, I think the reality is whether it is due to protests, whether it's due to economies open up, we're going to see some intermittent increases with infection, and that actually may ultimately prove to be one of the ways that we end up beating it, is because we have more and more people who have been infected who, remember early on, before we close everything down, the reason we closed it down was to protect our medical system, not to keep everyone healthy. It was to protect the medical system so that when people got sick, they had a place to go to get better. And as long as we have those beds in the hospitals that are available, we already know that the vast majority of these infections are not life-threatening. Like if you are, immunocompromised, or if you are 60 plus, it's potentially life-threatening, and it's definitely something to be worried about and to pay attention to. But that's why we closed things down, was to protect the medical system. And so built into this whole process is we have to continue to live our lives somehow, some way, which means we're going to go out, we're going to do things, and some of us are going to get sick when we do it. And it's not going to be fun. But as long as those numbers are lower than the threshold of beds in each community, we're going to be getting closer to that herd immunity that people talk about. Everyone that gets sick and gets better, they don't need the vaccine. They've been sick and they got better. They are vaccinated. So
actually, I don't think they've proved that yet, Jonathan.
Yeah, they have. Well, proved. They have come out and said that they're high percentage probability certain that once you've had it, you don't get it again. Proved, it's maybe not proved, but
no, I think they're in fact, they're studying that now to see whether it's actually the case.
Yeah.
I mean, the major issue, I think, is the lack of comprehensive testing.
Yep.
And that really hampers public health activities with regard to isolating outbreaks and containing them. And until we have a better testing system, I think we're going to continue to face, places where it's going to rapidly explode. So.
And the reality is, unless you're testing everyone all the time, this thing hides, right? People are asymptomatic. And if there's somebody that's asymptomatic and walking around with it, they're giving it to other people. And if they're not tested, or if there's a break in time between when they get it and they're asymptomatic and they're tested, they're infecting other people, right? That's all there is to it. And if everyone wears their masks all the time, we did something this weekend that I have not done. My son has he's almost 5'11" now, and he has a twin bed, and his twin bed has a footboard, and the footboard has slats. So the way he's been sleeping for the last 3 months is 3 months, 6 months, 8 months, is with his feet between the slats because he doesn't fit in his own bed. So we went on next door and we found a bed, and Eli and I went to Pleasant Hill and we picked up this bed, and we were wearing our masks, and we loaded it in the back of the car and we took it here. But we went to somebody's house, right? That's a risk. And then the next morning, I can't believe we did this, but the next morning, Eli and I went to see my nephews and my brother, and we kept our distance. We kicked a soccer ball back and forth. I don't know if you've ever played catch or kicked a soccer ball back and forth, but occasionally someone kicks something really poorly and it goes too high and you grab it with your hand. Well, if you do that and you touch it with your hand and then that guy kicks it back and he touches it with his hand, that's a risk. I mean, that's every single thing we do has a potential for that virus to transfer. There's a question that came in. What about the sailors who got sick a second time when they went back on that ship? Yeah, that I guess that I don't know about that specific circumstance. To the extent that happened and it's the exact same virus, then that disproves the idea that you have immunity for sure. But I don't know how the virus is changing. I don't know if they were sick from the and I actually honestly, not disagreeing at all with the question. I have read so many things and seen so many things that I don't know what's actually real when I read it anymore. It almost has to be vetted and studied and researched again for me to and have someone with authority to come out and tell me this. And I actually don't know the specifics of that one. So Scott or David, do you know the specifics of that? Have you heard about the Navy folks that went back to the boat and got sick again?
I did hear about that. And that's why I said to you earlier that it isn't a proven fact yet that you get immunity once you've had it. And I think there are studies going on to determine whether in fact that's the case or not. So.
Yeah. Okay. Okay, we answered that. I have about 3 more minutes. I'd love to answer more questions if they come in, and then I'm going to leave and turn it over to Scott and David and Paul, who are going to hang out and answer any other questions as well. So the folks that are on, how if you had your druthers, how often would we do these? Would you like us to do these every other week, once a month? What do you think is the best time frame to do these? You can put the answer in chat or even in the Q&A bar is fine.
And also just reminding you, we used to do these from the very beginning of COVID every week, and we just evolved to every other week. And it sounds like one of the comments says every other week seems good. I think if another crisis showed up that was hard to process as advisors or clients, we would step it back up. But I think we're in agreement that every other week seems to be appropriate right now.
Good. I just want to make sure that they are giving us permission to drop it to every other week. If they need more.
50% of the people said that.
Yeah. Yep. Yeah. Good.
What's going on out there? Yeah, good compromise. For instance, I'm glad there's one today after the yeah. No, it's funny, not funny, but the whole incidences that have happened recently with the protests / riots and all of this. I had my own father, who's I think an amazing sort of not practice client. He's a real client, of course, but he asked some really interesting questions, and he specifically said to me over the weekend he thought the markets would have a really hard time because of all the business lost. And then, me and John had a conversation about this at the team meeting with everybody else, and reminding us that these guys all have insurance. And but if you're out there and your brain's processing, something that happened, you have your own version of what you think that means, right? And so sometimes it's really helpful to sort of tease that out loud and find out, what does it really mean? And I think companies like Target or Adidas and some of the other names that have been hit really hard by the riots, Walgreens, CVS, I don't think it's really as hard as being out of business for 60 days, completely out of business or not being selling stuff. So.
What was that, David? You had added?
Oh, I mentioned Chase because there were some Chase branches that were burned or otherwise disabled.
I think
they've got a lot of levers to pull too. Instead of giving you 0.5% on your checking now or savings, now they give you a quarter, and they'll recoup that money in 4 days.
Right.
Or 4 hours.
And they didn't have anything stolen. They just had damage done, and so they'll have to fix that.
Yeah.
Yeah.
Probably ATM damage, like what happened in Berkeley last year. So.
Do you guys see the Q&A? Are you guys watching it? Because I'm going to step off. I want to make sure you're seeing the questions.
Yes, we see it.
Okay. Thanks for attending, everybody. I'll talk to you guys probably tomorrow morning or later today, and we'll see everyone else hopefully at Eli's show on Friday, right? Yeah, Friday.
Correct. Friday.
Yep. All right. Thanks, everyone.
Yeah. So thanks, Jonathan. So we'll go as long as you guys need. We have time for another at least 20 minutes of any questions that might be coming up. Recognizing there's a lot of noise out there and new fears and concerns, which always seem to hit the headlines, as our fearless leader never really seems to get it right when he speaks, as David full well knows.
So someone made a comment about the insurance companies coming back at us when they've had lots of payouts. And certainly sometimes that is the case, that rates will go up. But for these large corporations, they're already paying considerable insurance fees.
Right. 100%. I mean, I think insurance companies specifically do a really good job with their actuarial tables, and they just kind of know year in, year out for years on end about what happens. And they have a luxury of just raising premiums to offset any costs or loss that they like during hurricane season when they predict what they expect, and there's a couple extra hurricanes they don't expect, they just raise the premiums. They're profit centers, they're cash cows, all those guys, most of those insurance companies. I did notice Zoom was actually at all-time new highs today. It's now over $200 a share, which is sort of remarkable. I think the valuation of it is as if you went and bought a $50,000 car today, and they were asking you for $1 million for the car. That's how Zoom is being priced, as if they're talking about the valuation of Zoom is like the earnings they expect 7 years from now they're actually getting today, which is obviously not happening. So there's some little mini manias going on out there with some of these companies that are benefiting from all this coronavirus stuff for sure.
Well, yeah, the Zoom usage has catapulted, tremendously.
Yeah, exactly. So anyone that's on the call, do you have relatives or friends that have started to do different things in the last, 60 days that you maybe haven't yet, like gotten on a plane, like done things beyond social distancing, maybe started to, head back towards normal, maybe faster than we have or you have.
So there's a question about the increased premiums, and relative to the overall economy, I don't think that their impact is that significant.
Yeah, I think it's just really a way for them to protect their balance sheet. And remember, there's there's the increasing premiums because of the damage from the looting. But how about the people who haven't really driven their cars in the last 60 days and all the insurance claims that the insurance companies are not experiencing because claims are down so much, right? Because people haven't been driving nearly as much. I think it's sort of outweigh, both ways on each side, but I think insurance companies are going to be just fine. I don't know. There's a big hit to the economy there.
Well, I think the question was really specific with regard to the increase in fees that might come from this or some other outbreak. And I don't think that in the big picture it's that significant.
Yeah.
Does anybody have any other questions? Did anyone respond about activities in terms of your question, Scott?
I haven't seen anything there. No. I'm always curious, like I've got family in Florida, and I know that, my dad also has a place in New York, and they have no interest in getting on a plane, A, and B, going back to New York, which they normally would do this time of year. They do that whole Seinfeld's parents thing, right? And they're not interested in going to New York right now until things settle down. They feel a lot safer in Florida, as interesting as that sounds. But we also have friends and clients that are in Arizona, and they're golfing, and a lot of things didn't close down. They never stopped golfing, as crazy as that sounds, in Arizona, in Tucson. So, I think the country's gotten hit in different ways with this virus. And I'm always curious as to, what regions of the country are getting back to normal quicker, what kinds of regular normal things are happening. I don't remember ever having a curfew in San Francisco since I've lived here. So last night was the first time I had one of those.
People are playing golf again in the Bay Area as well. I'm not sure what the volume of usage is, but golf is an activity where you can maintain a lot of social distance. And I think what they're doing at the golf courses for people who use carts is they're having one person per cart as a way of maintaining that social distance.
Right.
And they're probably doing that in Arizona as well.
Yeah. It does. I try to follow sort of the global stats around the infections, the confirmed infections, and then the death rate, whether it's in Brazil or locally in this country. And it does appear like things are slowing down. It does look like that. Certain areas are hot spots, like Brazil and some specific states. But in general, if you look at the curve, it's definitely it's bending the right way. It's going in the right direction. And I think that's why governors are getting more comfortable to try and head towards some form of normal, little by little.
The problem is, states have just begun to open up.
Yeah.
So we're really not going to see the impact of some of these openings until next week.
Right.
And in terms of numbers of cases, and there are places like Alabama where cases, Georgia reopened and cases in Birmingham have gone up. And as of a few days ago, 87% of their critical care beds were in use. And they were concerned about whether they were going to have enough to deal with the new outbreaks or the new cases.
Which city was this in Alabama?
Birmingham.
Birmingham.
And, when you look at what's gone on in the Indian reservations, those have been devastating. All these cases in Iowa from the meat packing plants. So there are places where there
Still hot.
are significant rising cases, mostly in the middle of the country, as opposed to the two coasts at this point. And in some rural areas, it's going to be tremendously taxing on their health systems because they don't have big health systems.
Right.
So I'm actually a little pessimistic about what we're going to see a month from now.
Yeah. One of the things that was coming up recently was from a few clients was the idea that there's going to be a spike and then the markets are going to take a hit, from all this. And I always respond the same way when I hear the word markets. I ask, what markets are they talking about? And I just try to remind them that, the S&P and the Dow and the NASDAQ are your three markets here. But there's there's the Merval in Argentina, there's the CAC in France, right? There's the Bovespa in Brazil, and we're global investors for them, right? So we're not so focused just on the US markets and what may or may not happen here. In fact, I think 50% of any public company out there is not in the United States. And my dad does this a lot. He just really focuses on making investment decisions on what might happen to the Dow or the S&P, which is always a work in progress for me because I have to remind him, the Dow's 30 stocks and the S&P is only 500, and there's a whole world out there that has nothing to do with these companies, at all. I think a question may have come in here. Let's see. What effect, if any, might the shooting of George Floyd and all extenuating circumstances have on the economy overall? I mean, I think that's a really good question.
I think if you look at, what we're seeing is demonstrations in many major cities.
Yeah.
And if they continue for a long period of time, it could have certainly an impact on retail activity, even in reopened situations. That's probably the most significant, I would think. I think these are a combination of the frustration about police activity with regard to minority populations, but they're also a representation of frustration about how the federal government has handled COVID and the fact that, there isn't a confirmed sense that people have of confidence in a national reaction to this illness. And, I mean, certainly in my lifetime, I've never seen the federal government be as incompetent as it is right now. And when you look at the markets, though, particularly the domestic markets, the Fed is pumping so much liquidity into the market that that's what's sustaining this level at this point. And there are parts of the economy that are working very well, but we may have just lost Scott. Paul, are you still here?
I am.
Good, because you're the host, right?
Yeah.
So.
All right. So is that everything?
I believe so.
All right. Well,
Anybody have any other questions? Seems like not. So I think we can wrap it up at this point.
okay. Well, thanks for attending, and yeah, see everybody in a couple weeks, I guess then.
Yes.
All right. Bye,
Bye-bye.
everybody.